Avon Resources Limited is a gold exploration company with significant projects in British Columbia and the Yukon, trading on the TSX Venture Exchange, symbol ABN, and the OTCQB, symbol ABNAF. Surrounded by world-class gold deposits and mines, Avon's 23,000 hectares Forest Kerr Gold Project is located in the heart of the Golden Triangle in northwestern BC. For more information, visit us at avonresources.com.
You're listening to HowStreet.com radio, available online at TalkDigitalNetwork.com. Welcome to HowStreet.com radio, the online source for market opinions. Here is Jim Goddard.
My guest is Danielle Park, editor of the popular blog Juggling Dynamite and president of Venable Park Investment Council Incorporated. Welcome back to the show, Danielle.
Thanks, Jim. Happy July.
Danielle, the Canadian economy, the dollar, our markets, how closely tied are they to the U.S.? And if the U.S. takes a downturn, do we have no choice but to go down with them?
Basically, that's about right. I mean, they're our strongest trading partner, but it is also the very close relationship between the U.S. dollar as the global benchmark currency and the Canadian dollar and commodities, right? So if the U.S. Fed looks like it's going to be cutting rates, as everyone's expecting it to in the next month, or even starting this month or in the next few months, then everyone positions to be to move out of the U.S. dollar for a period of time as they anticipate rates going lower, and they look for other currencies to go in where yields may be higher. And what happens is that weakness typically drives a bounce in things like the price of oil, in the price of copper, and in our currency, the Canadian dollar. So it's almost like, at the top of every cycle, when demand has begun to turn down, when weakness starts to spread through the economy, that is when lagging indicators are all at the top, like employment looks great and consumer confidence is high and all those things, but that's always earmarks of the top of the cycle. And then what you start to see is, for example, corporate earnings were flat in 2018. They've been negative year to date in terms of the growth in corporate earnings. So that cycle seems to have peaked out. You saw commodities were weaker. They bounced a bit in the last little while since the U.S. Fed signaled their willingness to start cutting rates again, and you get the stronger Canadian dollar. But we saw all that in all the last several cycles, and what ultimately happens here is that it's a short-lived bounce in commodities because consumption is lower in the world, and you can see that in the data this week and in the price of oil in the last couple of days. It sort of went back up near 59 and then rolled back over again. We're still below, well below the 60 mark we were a couple of years ago even. And that's with all the geopolitical mess that's going on in the world. So you get these knee-jerk reactions from traders, but it doesn't ultimately mean that you're, doing anything in terms of the global demand cycle. So when that starts to happen, ultimately the Fed starts to cut rates. Then we've got a stronger Canadian dollar. We have at the moment a big gap between our Canadian surprise index factors and the U.S. The U.S. data has been very negative of late, and we had sort of, in retrospective numbers, we had one strong quarter in April in terms of GDP being a bit better than was expected, but that's, in the past. And we had a trade surplus in May for the first time in 10 months, but that's in the past. And so what ultimately happens here is that the Bank of Canada has to respond to the strengthening loonie because, we're trying to revive exports when we have a weakening economy here. And so when they look to cut rates to weaken the loonie, because we can't have this big outperformance relative to the U.S. dollar for long. We just can't afford it since they're buying our goods predominantly. And so when that happens, then you get usually, the peak of the cycle's in, the loonie starts to weaken. In the last couple of cycles, it fell off all the way down to the bottom of the business cycle with stocks. It's sort of a surrogate for the risk-on trade. When the risk-on trade goes in reverse and it's risk-off, everyone dumps currencies like the Aussie dollar, the Canadian dollar. That's when you can make some capital gains as a Canadian in the U.S. dollar, for example, not in the stocks, which are typically falling, but in the currency itself. And then you get usually a bottom in the value of the Canadian dollar, and we think that that's likely to happen in the months ahead. Again, as the economic cycle runs its course, rolls over, if the inverted yield curve all around the world is any indication, it seems that we probably are at or very close to recession, certainly in the U.S., and that is the leading economy that sort of has the knock-on effects to everywhere else. The U.S. yield curve is currently inverted at every point, and it was so for the entire full second quarter. Every time you've had a full quarter of inversion, that is, with having long-term rates less than short-term rates, it has meant a recession 100% of the time since the 1950s. And so that's where we are right now. And the same thing goes with the Canadian yield curve. We have every single point of the Canadian yield curve out to 30 years at less than the Bank of Canada rate. The Bank of Canada rate being 1.75. Our entire yield curve for 30-year money, it's 1.66 today. For 20-year, 1.62. So all these rates are less than you can get in just an overnight rate. So that's the very definition of this hugely inverted curve, and that really speaks volumes. It means that the potential for growth at this point is very weak, and they think that the Bank of Canada is going to have to cut rates soon. So all that's very connected, but basically if you think of the Canadian dollar as a risk-off, risk-on style currency along with the Aussie dollar, that it rallies with commodities when the U.S. dollar weakens, that's all late cycle stuff. Now the next rally will come out of the bottom of this particular downturn when things have come off enough that you get some, actual demand kicking in again, when prices have fallen enough to be able to have people afford things that they're able to buy, when companies have cut their overhead significantly in their workforce, suddenly their margins start to expand and you get a bottom and a recovery coming out of that. At that point, the Canadian dollar is likely to strengthen again, as will commodity prices. And that'll be one of the indicators that we're in the next recovery cycle.
We'll have more with Danielle Park right after this.
I'm Douglas Mason, CEO of Naturally Splendid, symbol NSP on the TSX Venture Exchange. Naturally Splendid is a biotechnology and consumer products company focused on the global cannabis and health markets. Naturally Splendid is expanding distribution in this rapidly growing market with products currently in Canada, the USA, South Korea, Germany, and Australia. To view our comprehensive company presentation and for more information, please visit our website at naturallysplendid.com.
Grand Portage Resources' Herbert Gold Project in southeast Alaska highlights increased gold resource, indicated and inferred, of 860,000 ounces, in excess of 10 grams per ton gold. Expansion drilling is planned on the Herbert Gold property for the summer of 2019. Grand Portage Resources trading symbols are GPG on the TSX Venture, GPTRF on the OTCQB, and GPB on Frankfurt. For more information, please visit our website, grandportage.com.
Welcome back. I'm speaking with Danielle Park. Danielle, one of my regular guests suggested that perhaps if there's a downturn in the economy, we won't see as many layoffs as last time because it was so hard to find personnel, and they don't want to go through that exercise again because those people will move on to other fields and just won't be available again. Is there any hope for that?
Well, I mean, there's always hope, but the problem is that the labor force continues to be the largest cost, and certainly companies don't want to lay off their skilled labor. They would love to hold on to it, but what the Canadian, for example, companies have done, the large cap companies this time, has been this insane behavior with the buybacks, right, which we've talked about in the U.S. For the last many years, but Canada really took off in spades the last 2 years with corporate buybacks on TSX-listed companies. It was at an all-time high in the 12 months ending in March 31st, and it was 50% higher than it was at the peak of the 2007 cycle. So what that really means is that companies have wasted a lot of their dry powder, have wasted a lot of their savings in the coffers that would have helped them keep people working through a downturn, absorb lower revenue and be able to fund things through to the recovery. I'm worried now that because they've done that, they've thrown all their good money after bad. When the share prices start to tank, which is inevitable, it's part of this cycle, especially when you have these level of extreme overvaluations, they're going to have very little choice but to look to cut costs everywhere they can. And the layoffs that begin, and we're certainly seeing those already in many sectors, including the auto sector, which is an important sector for the North American economy. We've already seen layoffs start there. We've already seen layoffs start in finance. Those two sectors really are leading for the layoff cycle. So that's already began. And of course, we've got households, the most indebted they've ever been. So just like companies aren't as flush with cash and able to ride out a downturn, households have literally almost no ability when they have next to no savings and tons of debt. They just can't afford to lose income for a period of weeks, never mind months. And so, and even if they have EI that kicks in, it's a portion of their prior income, certainly not a full income replacement. And that's where you get this real cash crunch throughout the system, which constrains spending and really just propels the whole downturn even further. So I think, I hope people can keep their jobs. We're certainly seeing things like the leading indicators for the economy that we watch, and things like the shippers, the transport companies. They've all rolled over. The smaller cap companies, the Russell 2000 companies that don't do share buybacks, that should have benefited the most from the Buy America First policies that have been in place for the last little while. They should have, if you were looking for an increase in domestic spending in the American economy, then it should have been the smaller to mid-cap companies that would have benefited from that rather than buying goods abroad. But in fact, you see that the shares of those companies have not participated in the bounce nearly as much in the past few months that you saw in the large cap companies, where the big companies were the primary buyers of their own shares. So you've got this rollover in the things that matter, things like the yield curve, things like transportation, even in the price of the energy companies, another example. So, yes, you've had this volatility in oil driven by headlines and geopolitics, but as I say, the price has been, is well below 60 still, where it's been for the last few years. And the energy companies themselves, Jim, the Canadian Energy Index, the share prices are almost back to where they were at the low in 2016. So if you remember, that was a massive sell-off. So you've got this strange decoupling going on in, the real economy, things that matter, and these large cap companies, which are still up, like the S&P and the NASDAQ, where these buybacks have taken place, and everything else that's more significant to the overall demand cycle, turning down. Copper's weak, another example. Semiconductor sales, tanking, down significantly, and that's another barometer of so-called, real demand in the world. So emerging market economies are faltering, and emerging and exports are really taking a hit across the board, and that's not just on trade tensions between the U.S. and the rest of the world, because you should see a pickup in, trade with other partners. If it was just to do with tensions between China and the U.S., the two largest world economies, you should see strength in other economies where you're getting, purchasing from other suppliers, so to speak. But you're not seeing that. Even in countries like India, where the domestic economy has so many, 1 billion people to drive it, you're seeing a rollover there. So it's certainly, everybody needs that export business, and it's just not strong enough because the world is already in a credit contraction after this epic credit bubble. And so I always like to say, if your plan is that the credit bubble will continue indefinitely, then you've got a pretty sketchy plan. And you really have to try and come up with a way to cope with the reality that this is a cycle, and that we're now into the longest ever on record in the month of July, and it's quite probable that we're already rolled over here, and that the downside will continue over the next many months.
We'll have more with Danielle Park right after this.
Hi, I'm Douglas Mason, President and CEO of Magnum Gold Corp, MGI and the TSX Venture Exchange. A 2015 drill program on the LH property intersected several high-grade gold intersections, including 11 meters of 20.66 grams per ton gold. Additional drill targets on the LH property have been identified by a 2018 drone airborne magnetic survey to further evaluate a pyrrhotite-enriched gold-bearing system. Please visit our website at magnumgoldcorp.com.
Don't miss out. Stay informed. Receive the HowStreet.com weekly recap with thought-provoking podcasts, radio, and articles delivered to your inbox. Sign up for the HowStreet.com weekly recap on our homepage at HowStreet.com.
Welcome back. We're speaking with Danielle Park. Danielle, do you like this move by BC to crack down on money laundering and to hold an inquiry into it?
Well, yeah. I mean, don't you think it's important? If we've got so much evidence of this correlation between, luxury sales, money laundering, luxury sales and things like, jewelry, art, and exotic cars. That's all, great for people selling those things. Great for realtors selling, very expensive real estate perhaps, but at the same time, you've got unaffordability for the average person living there trying to do an honest job and work, and you've got this fentanyl plague, and they have direct correlation between the money laundering going on in the high-end real estate and the luxury sales, and the fentanyl business, which is causing so much, devastation across all of North America and much of the world. So it's directly correlated. So the new AG that came in BC, he's literally, watching the evidence and deciding, okay, there's some things we can do here to ferret this out. And it's not that popular because those that have been sort of on the gravy train of this illicit funds flow and sort of taking commissions and making sales thanks to that are sort of, saying, why rock the boat? But I mean, as I like to say, it really does matter how we make our money. And if the way that some people are making money is causing carnage and devastation for the rest of us in the overall economy, surely that's something that we shouldn't continue to subsidize. So they've brought in some legislation. One of the big things, of course, being the Landowner Transparency Act, which is a public database to say who the beneficial owners are behind these anonymous companies that have been buying real estate the past several years. That's very important because so long as people are able to be anonymous within these corporate structures, of course, it's very difficult to track who's money laundering, who's a drug dealer, who's doing illicit activities. So it's very important to get that transparency, get it out into the light of day.
Also, with the home buyer tax, we have a new court case where a foreign buyer, had a 1% interest in a home, but the government isn't convinced it's a 1% interest, and they've given that person the entire $1.4 million tax bill. Is that another way that they might be trying to launder money, saying, I only have a 1% interest, but is that really true?
Yeah, well, there's all sorts of things like that, exactly. There's lots of shelters and the whole, opacity of keeping everything hidden from view and not having, public filings under pseudonyms and all sorts of things. I mean, this is not in our best interest as a nation. It's not in our best interest as a society to have this kind of funds flowing through and causing all this harm as they go. And the other side of that, of course, as I've discussed before, is that the heavily indebted households in many Canadian urban centers are there because of the unaffordable nature of things like housing, which has been inflated by these flows. And, we know that, for example, there's been some very good studies done recently that people with high debt problems tend to have 3 times the incidence of mental health problems. So again, there's another productivity loss when you've got a very stressed out, indebted population, possibly using and abusing drugs as part of their medication for that. There's circles here. It's all connected. But certainly we know that labor force productivity has been in decline, both because of health problems, mental health problems, physical, as well as, the fact that people are distracted by social media. We've got this epidemic of addiction to handheld devices, which is, I think, run its course. I think more people are starting to appreciate that that's very counterproductive as well. Certainly when the handheld phones first came in, when smartphones first came in about, 15 years ago, there was some advantage early on in things that people could do from their handheld versus having to go back to a desktop. But I think we're far past now. We're now losing ground, so to speak, because there's too much attention on nonsense and not enough attention on things like attentive driving, attentive parenting, health, food preparation, things that actually matter to the long-term health and stability of the country. So those are the things we have to reincent, refocus, and I think that's where the pendulum's swinging next.
Well, speaking of health problems, Australian officials have found people are getting spiny growths at the base of their skull to support their head because they're always looking down at their phone.
Oh, is that right? I'm not surprised. I'm really not. I mean, if you look everywhere in the world, if you're one of the few looking up, you'll notice how few are doing that, and how most are looking down. There's some really interesting studies going on brain development, and one of the ones I saw lately, which I thought was fantastic, was it made sense to me. It was the study that shows the correlation between a lot of wealth and control and power and influence and brain damage. And I thought this is quite interesting. So they found that the more you have the ability to control, whether it's the information flow, whether it's, outcomes around you. I mean, you'd think that's great. That should be good for mental health, right? If you're wealthy, if you're powerful, if you're in a position of influence over your life and what happens in it, and that sounds all great, except what they've discovered is that the longer that goes on, the less people speak truth to power, the less people tell you honest things and feedback, the less you are aware of the complexity of the scenarios and you think everything's sort of all your way, the more brain damage they've been able to scan in people. So again, it goes back to robust systems have countervailing forces. I think this is essential. In strong families, a strong parent has a countervailing strong parent as a partner, or, the same with if you have strong kids. You want to have, a give and go between the members of the family, not one dominating everything, not one getting away. Same within politics. One of the most important things I saw this week was this appointing of Christine Lagarde, who's been the head of the IMF, now being nominated to move into the head of the ECB, for example, and the head of the ECB being Mario Draghi, being he's going to now go and head the IMF. And we've really got this revolving door between these people that have no real appreciation or connection to the real world. They live in these ivory towers where they espouse nonsense, absolute garbage theories that are actually detrimental, harmful, and have been, proved to be false repeatedly in the past 15 years as we've gone through this nightmare of monetary iterations of policy and experiments and all these things, and we keep getting them moving from one head global institution to another, and you're not getting any new views. You're just getting the same old prescriptions ad nauseum, the same harm compounding, debt mounting, instability rising. And so we really have to get a cathartic cleanse. And I think that the opportunity there is when the asset bubbles deflate, when the downturn accelerates, when it's evident once more that these are false prophets, that they don't actually have answers, they have harm to inflict. And I think that's when you get an opportunity to clean house and start over. So, we'll go back to hopefully basics like saving and working hard and compensating people fair wages for fair work, and, taking the scammers and cheats and liars and money launderers, pushing them back to the fringes rather than allowing them to be the dominant forces in our markets and assets. So all those things are essential. I see it as positive. Or just, from here to there, there's going to be a fairly tumultuous time, I think.
Danielle, thank you so much for chatting with us.
Hey, thank you, Jim.
My guest has been Danielle Park, editor of the popular blog Juggling Dynamite. If you have any questions for Danielle or any of our other guests, you can send them to info@howstreet.com. Find us on Twitter @HowStreet, our YouTube channel, Talk Digital Network. I'm Jim Goddard. Thank you for listening, and happy 4th of July to our American listeners.
Comments made on HowStreet.com radio are an expression of opinion only and should not be construed in any matter whatsoever as recommendations to buy or sell any financial instrument at any time. Available online at TalkDigitalNetwork.com. HowStreet.com radio is a production of HowStreet Media Incorporated.